How is everybody doing on this fantastic Tuesday morning? We got Mr. Powell gonna speak at 10. I don't know if that's gonna be a televised event or not. So we will definitely be looking for that if we can find it. As far as trades goes, Friday we had a phenomenal bullish day on the S&P 500. Basically coming off of a beautiful, perfect, bullish engulfing signal that we got as support. We love it. We love it. We love it when we get those signals. It did provide an opportunistic entry point at the London Open. So if you were able to partake in that dramatic repricing to the upside, congrats to you. My one concern is you are into resistance. Um, yeah, I mean, the only resistance that I could say that you're even into, to be honest with you, would be a Fibonacci retracement. I mean, if you want to use a trend line or some stuff like that, go right ahead, be my guest. You can see that you're bouncing off of the 50% retrace of this expansion lower. So that seems to be what's going on here. Hang on a second. I got to take profits. As it, we just made it a fresh daily low. We haven't taken out yesterday's low yet. But I just took a simple day trade at the open. A short setup at the open. I might have missed my exit there, goofing off. So we'll see what happens. This is daily support, guys. This white line right here. It's going to be a very important line moving forward. So if he comes out and he's dovish, then this is the area at which you want to be a buyer potentially. If I get off of this hourly and pull it up, you're gonna see there's quite a bit of a move happening here on a smaller time frame. You can see how the volume spiked up here on the open. You can't see the open because they don't have it outlined on this chart, but it literally comes in like right through here. That red line, that's going to be really close to the opening price, 22,392 spot 50 on Bitget right here. Boom. That's your open on Coinbase. 1900 hours is the open for the daily candle. That's your open, the dotted line. You can see how price bounced off daily support, traded up to the open, made a little stop run on any early shorts, and then rolled over. My profit objective on this trade was daily support. But I do have my stop loss trailed to where I'll be making 20% if it does go up, which is needed in order to even make any profits if you're using higher leverage. Otherwise, it's just a break-even trade. So that's a nice move down into that daily support. You typically want to be looking for buying opportunities, not selling opportunities, because you are in an uptrend regardless of what the bears is going to tell you. Take it from somebody who knows. Currently, in the last 3 days, you're not trending. You're trading inside of yesterday. Yesterday traded inside of the previous day. So you're compressing, you're wedging up. This is what people would be calling a bear flag. A bear flag. So in order to see their bear flag, their pattern trade, which, bear flag, it's a pattern. So if it were to break down, you would need a daily close under your daily support. Last daily support, lowest close, objective price, 22,350. All right. So you can see there how dotted white line entry, take profit. Nothing spectacular. I wasn't looking for a move like this. Okay. I was not expecting a move like that. All right. What I was expecting was this, because it's inside of yesterday's range. Also, that range has already been made today. So what do I mean by that? Well, if you go and just look at today's only data, you can see there's your opening price. You had a little move lower, up, up, up. You set the day of high of day. Then you come down, 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 down. Here's your low of day. Retest open, fail. New low of day. Retest open, fail. New low of day. So currently the daily trend is lower. Hence me taking the short right there. Why would I take the short right there? Because it's the opening price of the daily range. Those are the high probable areas that I teach you to look for trade entries, right? Objective price points. They are objective. This will never change. This cannot be and never will be subjective. No matter what day you go back in history and look, on March the 6th, 2023, Bitcoin daily candle opened at that price. So if you take objectivity out of your price action trading, you will have much better results. You will get subjectivity in your trend lines and, indicators and stuff like that. So we like to look for the objective levels, and we like to operate inside of the range that price has already traded through, because that means there's a higher probability that price is going to potentially trade in that range. When you are in a range-bound market, which we have been for several days in a row, you are not looking for bullish or bearish continuation. You're just looking for areas where you can maximize profit potential, i.e., high probable setups. All right. I'm looking to be a buyer, but that scalp short was just too easy not to take it. Just too easy not to take it. Good morning, everybody. Yeah, the music was a little bit dramatic. Those are they're basically songs for people that like do documentary style videos. I usually have trap beats going or something in the background as we're getting set up. Figured a change was in order, as we don't want to keep doing the same thing over and over again. We like to change it up. So how is the Future Legends this morning? Hopefully you guys are doing fantastic. We're 5 minutes out from the market open. Currently, if we look at the broader indices, the US 30, the US 100, the S&P 500, you can see that you're pretty much unchanged on the day. You're at 0.03% on the S&P 500. That means you are pretty much trading at the open. The US 30, same, 0.08% to downside. And on the NASDAQ, you are up 0.1%. You are not moving on anything. You are seeing a bit of movement on the DXY this morning. It is up 0.3%. Not quite a 0.5%, but it does look like it is trying to take out yesterday's swing high. This is yesterday's swing high right there. The high of day yesterday. Wouldn't take away necessarily from the breakdown, but since you took out the low, if you take out the high and close strong on the day, then that will signal that this is a potential bear trap. And if that is the case, then you would be looking for higher prices on the dollar. I think it's all going to hedge on basically what Mr. Powell says today. If he comes out and he's dovish, remember he's also testifying again tomorrow. So there's going to be a lot of stuff said that really probably might not even influence the marketplace at all. And then again, we could see one of the most volatile days of the year, today and tomorrow. It's just the whole market is watching him, right? The reason we had such a bullish day on Friday was because the Georgia Fed guy, Bostic, came out with a real dovish tone, saying that the Fed might have done enough already and that they would probably be looking to hike, 25 basis points for a couple more times and then give it a break and see what kind of data shakes loose at that point. The market really enjoyed that and got a spectacular bounce. We discussed that earlier. That's this right here. All right, you can go back in the chart and look. I mean, you basically see right where it got really bullish was through that time when he spoke. So trading up to 50% retracement of the broader down move of the expansion lower. This is your expansion lower. This is what we call in the business a correction. Right? It is a correction. So usually sellers will look to take advantage of a correction anywhere from the 50% all the way up to the 702 or the 781 or whatever 7 fib number you like to use. Right? But yesterday was a failure at the 50% retracement. So what I would like to see is we take out yesterday's low at 10 o'clock or when he starts to speak, and then we get that bullish momentum. Because as of right now, everything's still structured bullish. Right? There's your 50%, your 50 EMA on the daily. There's your 21, there's your 100, there's your 200. All of those, all in all, structured bullishly. It looks good. You're back above the 50 on the RSI. Looks good. You are clearly trending higher up off the lows. Looks good. If you throw a trend line on this, let me get rid of the moving averages. Let me get rid of this here. Let's just do it this way. I forgot. This only works on the line chart. So yeah, you can see that you had a little bit of a breakdown there. Wait, no, you didn't. There you go. There it is. Still isn't right. Come on. There we go. So a little bit of a breakdown, fake out move, breakdown, and then boom, right back above it. So bulls defended this trend line. This is the bullish trend line. This is your bear market lows. So bears were looking for downside continuation through here. So they sold on every pop on the way up. They sold that, they lost. They sold that, they lost. They sold this, they lost. They sold there, they lost. They finally caught one there. They did the same thing on this pop. Because if I show you here, from swing high to swing low, where'd you come in? Right there. So they got short here. They lost again. So of course they're shorting this, right? Why? Because they're bears. That's why. They think the market's going to roll over and create new lows. They think this rally that we've been looking at all year is nothing more than, a bear market bounce. But I believe they're wrong. I believe that they are interpreting their data the wrong way. But time will tell, obviously. Who's right, who's wrong, right? Doesn't really matter who's right and who's wrong. What matters is not if you can correctly identify market direction. Ooh, big move lower. There goes yesterday's low. So there you go. That was a nice short setup. To the downside it went. Took out yesterday's low just now. That's at the market open. You had to be also looking for shorts out of, coming out of this. That's a lot of momentum to the downside. And then every pop you got, you were sold into, right? Just the intraday bias is all. I am ultimately looking for area to be a buyer, but it doesn't look like it wants to be here. It still could be. It still could hold for sure. You got intraday support down there that hasn't been busted yet. You did lose 4 hour support, but you got it right back. There. But then you got it right back. But this right here was my concern. Once we reclaimed resistance, making this a trap, we instantly came back. And you can see how and where the setup was, right? Objective price points. But this would only be your target because it's daily support. And that can't hold no matter how deep this thing digs, no matter how many stops it triggers. Ultimately, it could end up holding support and we get a big bullish bounce. This is going to be tied up with Silvergate, that bank. So, yeah. But we've also, on a larger scale here, your mean reversion on like your higher time frames all the way up to a daily shows that you're still overbought. So, I mean, you haven't missed anything. We've been looking for a correction. We've been looking for a pullback. But that pullback has to be into a significant area of support. Down here is a beautiful, significant area of support. You have another Feb low. That's going to be February's low. You could ultimately find support after taking that out. And then naturally, daily support, you have another daily support level down here. So as much resistance that you have above you, you also have support under you. If we look at this on a weekly time frame, throw up the only moving average that matters to me on a weekly is going to be that one right there, because on the near term, it does a really good job of showing trending dynamics, right? Right. Now, if you trade that or try to use that as a buy or sell signal, you're going to get beat up in choppy environments. We don't use it for that. What we use it for is to show us the direction, the current time, or the current market direction is up. You're trending higher currently. Down here's your yearly opening range. You're up on the year. You're up on the quarter. You're up. That's up. That is not a bearish quarter candle. It is one of the most bullish quarterly candles I have seen in a while. In fact, since all of 2022, you didn't have a single bullish close in 2022. There's 24 days left on this quarter. Are you going to close up or down in 24 days? What are the likelihoods or the probabilities of closing another negative quarter? Low. Low. Because of the expansion. To be honest with you and frank, you could trade all the way to 19,423 and I would still have a bullish bias. That would, in fact, lose the weekly 21 if you were to get down there. See that? So just keep that in mind. I am overall bullish, but where we are currently trading at right now, it makes it very difficult to position ourselves for the bullish trade. Weekly support, this week's open, 22,432. It's not lining up with daily support. That's actually lining up with daily resistance. Okay? So that's another bearish factor on the week. I do love the fact, though, that Monday and closed bearishly, and potentially we could be searching for the weekly low as we speak. Right? So it's going to be probably a pretty volatile day. I've been seeing a lot of Twitter guys and YouTubers compare some stuff, because you got a lot of fractal people out there, right? Lots and lots of fractal guys. They love to go back in the chart and find things that look similar to what we're going through now. So that way they can be like, this is where we are right now. No, we're not. No, we're not. We're not there at all. We're at 22,300. This is at 5,100. Okay? So we're not there at all. We're not even close to there. We're way above that. but it's the fractal, it's the nature, the pattern that they're going after, right? Because they like to basically say, since this happened once before in Bitcoin's life, it could potentially happen again in Bitcoin's life. Yeah, okay. I'll give you that. It could. But this structure on the daily does not look like the same structure that we currently have. What do you mean, trade talk? What are you talking about? Looks exactly like what we have going on right now. No, it doesn't. Because we've lost the 21 on the daily here. You lost it. It's gone. See, for those people that have been following me for any time, any length of time at all, they know that when I'm searching for day trading opportunities, I typically will be looking to take trades opposite the daily 21. So if price is trending under the daily 21 and under the 50 on the daily, then typically I'm looking for short entries, right? For the day trade. That does not mean that my bias on Bitcoin is bearish. It just means for the day trading opportunity. I am typically looking for bearish setups once this occurs. You have broken down. You have taken out support. You are moving lower. For the last 4 days, you have consolidated sideways. That is not a bullish signal. It is more bearish than bullish. And we needed a pullback. This rally was phenomenal. Need a pullback. A deeper correction than what we have here would be better. So, like, if you fib the bear market low to where we currently are, you can pull back to any one of these 3 areas of price and still look good. So you can get much cheaper. You could buy 18K for instance, potentially. But we have repriced back above the FTX collapse, and we are currently holding above the FTX collapse. So in my opinion, there is your FTX collapse. I like it higher as long as she's trading above that, or it. Let's not misgender Bitcoin. It is an asset and nothing more. It is an instrument, a financial instrument used for profiteering. My favorite thing on the planet. But it is holding that trend line pretty damn good for now, so yeah. Right? If you got correlation with some kind of support, which you do, buy it there or buy it there. Or if you're on the liquidity break side of things, then you must wait for a new low. Or if you have a longer mindset, for instance, if you're a swing trader that only likes to take single positions based on monthly ranges, wait for February's low to be taken out, then get bullish. There's so many different ways you can approach this marketplace, but the objective things are the best things. And right now, objectively, monthly resistance is holding price down. You have not closed the bullish candle. This is your highest bullish closing candle, and that's from last year. And you have 3 months, you have traded above it, and you have not been able to close up there. So what does that tell us? It tells us that there's a lot of supply up there. And we know there's supply based on this chart right here. These are all, this is your near term, long term, and midterm hodler cohorts, these 3 lines. Notice how price is above all 3 of them. That pretty much means that everybody from this point at least is in profit. That's supply. So every one of these people have the potential to end up being sellers. Okay? Why would they do that? You have uncertain times. Inflation is still higher. The news keeps talking about recession and stickier than usual inflation. Those 2 words right there are going to keep investors on the sideline. You also have the 2-year yields at a highest point that they have seen since the '08 crisis. All right? Since your '07, '08 crisis, you got rates at 4.8% right now. 4.8%. That's free money to just sit by and wait. To just sit and wait. So it obviously investors want to generate more than 4% on a year. But if you can get by 2022 with a 4% profit, 4.8% profit margin, when everybody else is getting chopped up, getting crushed, you did pretty damn good that year. So all I'm trying to say is that's where most of your money is. Until we start seeing inflation trending much lower, at a much more rapid pace, I'm afraid, Bitcoin it's just not going to be that attractive for investors. Simply put, Bitcoin is one of the most volatile asset classes to trade. And guys that are handling, billions of dollars, they're not really wanting to put their money in an asset class that has the potential of 84% crashes, right? Not during a potential crash. But I think as long as you keep trending lower, asset prices are going to trend higher. All your risk assets, they're going to climb. They're going to climb. They're just waiting. They're just waiting. The money's on the sideline. The money's waiting. You're back above your yearly open on the Dow. That's good. That's good. If we can maintain that structure and get another bullish impulse, then we will have a range and it will be set. Right? And that's good. There's your 2023 high. Here is your 2023 low. You are trading mid-range. See that? mid-range. That is a doji on the year. Slight bullish doji on the year. As long as you're above this, you can look for buying opportunities. As long as you're below it, you can look for selling opportunities. Your longer term targets would be the low end of the range, but I wouldn't be targeting the wick. I would target supports, and I would target big ones, weeklies or monthlies. I would not play around too much. So basically, my targets would be something like this. All right, tighten that range up a bit and see how it goes. Off of this bearish engulfing month, people are going to be looking to sell. Technical analysts, price action traders, discretionary traders such as myself. That's a selling signal to them. It's a lower high from this high, and you broke down, closed below support. I see a pullback, or I did see a pullback, but now what I see is a market that looks like it's leaning over. On the US 30, on the 100, it looks great, and on the S&P 500, you still look great. Let's be honest. You're into monthly resistance right now on the S&P 500. That's why you're struggling here. Right there. That is why you're struggling. You're at objective monthly resistance. But still, for the yearly range, you're trading up on the highs. You're not trading at the 2023 lows. You see what I'm saying? You're trading at the 2023 highs. There's your 2023 high. There's your 2023 low. Boom, boom. You're trading at the upper edge or the upper boundary, if you will. So we don't want to be buying it here. We don't want to be buyers here. Rookies buy into resistance. Rookies sell into support. You are not a rookie anymore. You are a future legend. You are going to beat this trading game. You know why? Because you are subscribed to this channel. Welcome to anybody that is new. You have found the last price action channel you need to look for. The best one on YouTube. On the weekly, you look good on the S&P 500. Slight little pullbacks, okay. Looks good, right? Last week had a nice, good close. Still, that does look bad, but you're right back on the right side of the trend. You're back on the right side of the trend. So what we were hoping for or wanting to see is for the US dollar to set a bull trap. That's what we are looking for, the USD to set a bull trap. Here's the problem. As long as you're trading above 103.66, people are going to be buying supports. Any higher time frame supports that get formed, people are going to be looking to be a buyer there, simply because you're up on the year, up on the quarter. You're not currently trending to the upside yet. What I mean by that is your 21 exponential has not pulled an upward slope, and price is not trading above it. So until you get price trading above, and until you get that upward slope on the 21, your risk is still, in my opinion, to the downside. Once this slope changes, will be once price closes above here, then you'll probably get the slope change and the adjustment. That in itself will turn buy bots and algos back on. So we're going to see if we built in a bull trap with this candle, and it can take several weeks to play out. We nailed the best short on Bitcoin using the same exact strategy. Same exact strategy. Right up here. Right up here. We were still short. We were short from up there. We were waiting for a fresh yearly high. We got it. Boom. You broke out to the upside. You even got yourself an upward slope. And then you broke down. Boom. That was the sell trade of 2022. And it made buku dollars. So we're hoping something like that plays out on the DXY. We don't know that it will. And the reason that we want it to play out is because we shorted the dollar up here at 113.88, and we bought Bitcoin on the lows. On the lows. Then we reallocated more capital on the yearly open. So we were able to get ourselves positioned bullishly at roughly around 16,530. My exact entry price on the long that I am still currently holding on Bitcoin is 16,541 spot 50. So $10 off the yearly open. Not bad. But yeah, for the last 5 weeks, that position has not been making money. It has been sideways. So there is an opportunity cost to set in a sideways market for sure. You can deploy that capital as in a day trading format if you wish, or just leave it on and, hopefully investors see the light. The street is more mixed than it's ever been before. We're in an environment that Wall Street investors that have 40 years experience have never seen. So naturally, you're going to have people that are bullish and you're going to have people that are bearish. So that's where you are in the current climate and the current investment climate. You have a mix. You have a mixture of bulls and a mixture of bears out there. And you have a whole lot of, I don't know what to do. So I'm just going to sit on my hands. And that's not a bad place to be right now. I mean, because we don't know what's going to happen. We don't know if the Fed's going to be hiking, all of 2023. I think they are. I think they're not going to stop. They can't stop until inflation comes lower. They're waiting on a couple other data sets to start to change around a little bit. First off, the main thing they're watching is jobs, right? Typically, in a recession, you see a loss of jobs. There are several interviews out there that I think you guys should be privy to and you should watch. Let me pull this one up. I typically don't like shout out other channels, but when there's important things to know, then I will. Like, because there are very, very smart people out there in this world. The smartest people in the world, actually. So here's one you guys should take a listen to. Let me drop this channel in there. If you haven't listened to this interview, please do so. This guy is a brilliant macro analyst. So he thinks that the recession is still coming. You know what I'm saying? And like I said, as long as you have recessionary fears and stickier inflation, then the risk is to the downside. But we trade price and price alone over here. We let price tell us what's up. And right now, currently, you're still structured bullishly. So until that structure changes, until the marketplace decides to price in that bearishness, we must remain optimistically bullish. What's with the VXX? I think people shouldn't even be looking at the VIX right now. Right? This is an inverse short-term ETN. I don't know what this is. Leave it alone. It's probably some kind of, who knows what it is, right? I don't trade it. The VIX, if you're waiting for a blow-off top in the VIX, like you got during the March 2020 pandemic, you're looking at the wrong thing, guys. You're looking at the wrong thing. Money didn't flow. So, like, when we had this, right, the pandemic, the scare of 2020, money flew into the VIX. It flew out of risk and went into the VIX. You could see it on the chart. It also rotated into risk off assets such as the Japanese yen and the Swiss franc. This bear market was different. They didn't rotate that capital into the VIX. They didn't rotate capital into the risk off assets. They rotated the capital into the dollar. This is where the money went. Right here. We were, among the first people to mention that to others, right? You guys shouldn't be looking for a blow off top in the VIX. You've already gotten that blow off on the dollar. So whatever capital allocation you had going into the dollar for the risk off scenario, a lot of that money came out of the dollar once inflation had topped. Then you got your yields moving higher. So a safe bet is to put your money into something that can generate a positive yield, positive gains. 5%, almost 5% is very attractive in an uncertain environment. Okay? But I mean, I've explained that a million times. This is where the money went. It didn't go into the VIX. If you look at the Japanese yen, we'll go over here to the currency futures real quick. Look at your Japanese yen. Money did not flow in. Right? 2020 pandemic right there. Look at that rise, that spike you got. That's that capital being allocated to the risk off asset. And you can do the same thing on the Swiss franc right here. Go back to March 2020, pandemic. Here you are. There's your spike. Capital allocated itself to the risk off scenario. Boom. Now, at the early part of 2022 bear market, you were selling off. This should have been going up, not down. It went down. So it only changed once the central bank, the Swiss franc central bank, changed its monetary policy. Went from being dovish to hawkish like every other central bank out there. So the money went to the dollar and the dollar alone. And now money's flowing into bond yields, all that stuff. All of this, right? It's on the chart. You can see it. It's as clear as day. 4.964. Huge. Where is Powell speaking? C-SPAN? Well, let's pull it up. Does C-SPAN have a live YouTube? Hey, look, Trade
Let's say
Talk
you're a
is
small
live.
business owner, investing in marketing on social media and television, but seeing zero return. So you call in Ironside. Now you're finding new ways of reaching the right
Oh,
audience.
shut up, man. I hate commercials.
Pressures, unquote. The Fed, understandably, the Fed can't force corporations to change their ways or rewrite the Wall Street business model on its own, but the Fed can talk about it. High interest rates, falling wages, increasing unemployment are all hallmarks of failed policies that end up helping Wall Street, the largest corporations in the country,
Boom,
the
boom,
wealthiest
boom.
people
Down,
in the
down,
country.
down.
Because let's be clear what we're talking about when people use the economic speak that can cloud this conversation. Cooling the economy means laying off workers. Lowering demand means workers get fewer raises. Of course, there are times when the Fed must act. We can't allow inflation to become entrenched.
Getting ready
We've
to
seen
take out this
encouraging
low right
trends.
here.
That isn't happening. And there are other ways we can bring prices down instead of lowering demand. Again, making people poorer, laying people off, denying worker raises. We can speed up and strengthen our supply chains. We can bring.
If you want to take your chance and then try to get long there, be my guest. Just make sure you know what you're risking, guys. Very volatile, very risky, very dangerous to trade
Infrastructure
this.
bill. For the first time in decades, we're finally recognizing the damage that I and many of my colleagues warned the corporate offshoring would do to our economy. Look at East Palestine,
the
Ohio,
leverage
a
down.
community that Senator Vance and I have visited a number of times
Small
recently.
position
America learned about
sizes.
this small town last month when a Norfolk Southern train derailed and spewed hazardous material into this community. East Palestine is more than just a disaster headline. Columbiana County was once the center of American ceramics manufacturing, at one time producing 80% of ceramics of dishware in this country. One county produced 80%.
Stop losses.
When I was there last week, I was talking to the sheriff at the 1820 Candle Company. He was talking about how the last one closed just a few years back. Like so many industries, these jobs moved overseas, and we know why. The same reason Norfolk Southern cuts cost at the expense of safety, eliminating one third of its workforce in the last 10 years. Then you're surprised with these derailments? It's the same reason corporations now keep prices high even as supply chains stabilize. It's the Wall Street business model. Chair Powell knows that. I know that. My Republican colleagues and Democratic colleagues know that. It's a Wall Street business model. Quarter after quarter, corporations are expected to cut costs at any cost. They skimp on safety. They move production overseas to countries where they can pay workers less because of trade deals that they lobbied for. And Wall Street demands they post profit increases, even in the middle of a global pandemic. That's the problem with our economy. And not only will higher interest rates not solve it, if they're overdone, they'll make it worse. We can't risk undermining one of the successes of our current economy. For the first time in decades, workers are finally starting to get a little power in this economy. Unemployment's at a historic low, 3.4%. That's not just a number. That means Americans have more opportunities, more options, even in places
if this is going to be the low a week, you can take a long.
Have the power to demand.
You can set your stop loss under the current low of the week. Current low of the week is 21932 spot 74. You are by that if you are expecting Powell to be dovish. Right now, this guy is just ranting about the railroad. I am not saying that you should get long. All right. I'm just saying, if this is going to be the low of the week, and it is going to be a bullish week, then the best place to get long would be the low of week. Yes, obviously the dollar is ripping. Asset classes are falling, all of them. You're down almost a whole percent. There, you're down 0.67%. There, you're down 1.05% on the US 100. So currently, you have the south side really, really, really strong. Bitcoin's only down 1.74%. So what I'm saying is you've liquidated last week's low, and you're only down 1.78%. That's not bad. That's not bad at all, right? So, I mean, you have a clear and obvious place to mark your risk. This is what I mean when I tell you, if you know what you're risking, if you know how much you're willing to lose, and you're okay with that, there's no better place to be a buyer than at the bottom of the week. And as obviously this can change if you get another big bearish sentiment or hawkish sentiment from Fed Chair Powell.
Raises and retirement security and paid sick days and some control over their schedules. It means more Americans have the dignity that comes with a good job that provides for their family. We must ensure that all Americans have the opportunity for that.
Well, we're 12 minutes into this thing.
Myself.
Here, let's just go to the live.
Spending and printing trillions of dollars.
That's why we have inflation.
Caving to the radical left in this country. Seeing policies posited and then implemented that led to the worst inflation in 40 years. Seeing our inflation at 9.1%. Seeing American families struggle because of the weight of the government on their shoulders. Seeing the devastation from South Carolina to Ohio. It's unbelievable that the progressives in this country who caused a 9.1% inflation would then turn somewhere besides in the mirror to see the absolute devastation caused by their out-of-control spending is remarkable.
Last week's low is what that means.
To stop the out-of-control inflation caused by the out-of-control spending, the Fed steps in.
Is what that means.
To cool the economy. Well, the definition of cooling the economy is necessary because we've seen the most radical approach to a problem that was in our rearview mirror being used as a Trojan horse to bring in a level of socialism and spending that our nation has not seen in my lifetime.
Nope.
The facts are very simple. When you get to 9.1% inflation in this nation, As a kid who grew up in a single-parent household, mired in poverty, a 40% today, 100% just a year ago increase in the gas prices devastates single mothers around this country. For seniors on fixed income, whose savings are being depleted with an average cost just last month of a $433 increase because of inflation. For my friends on the other side of the aisle to look any place besides a mirror, I find stunning. The truth is that when your food prices go up over 20%, when your electricity is up over 20%, you have to ask yourself, where in the
Let's see
world
if we got
are
any
they?
buying going on
They
down
cannot
here.
be in this universe. It must be an alternate
Definitely
universe
a ton
where, in
of
fact, it's
selling
okay
going
for us
on
to see
down here.
prices go through the roof
Yellow is selling.
and our economy not stumble, but fall into a ditch. Why are we in the ditch? Because progressives used the pandemic
this is
as a way
your
to usher
fear
in
selling.
a form of spending that takes the money out of the pockets of everyday Americans and puts it in the coffers
When other people are
of the
fearful.
government. There is a better way. The better way is to trust the American people. And when you do so, we don't have to have the Fed come in and raise interest rates so high to quell the challenges in our economy so that today versus 18 months ago, the price of the same house for your mortgage payment is twice as high.
The low
Why?
we have on
Because of the
Bitget
runaway
currently,
spending.
21917
other side
spot
of the aisle.
50.
I'm sure I do not have time for my opening comments. What I will say without any question, as I look around the country and I ask myself, how devastating is it that today it costs $433 more than it did a year ago? The answer is it is a crisis. When the average family in our country just a couple of years ago
This
didn't
is so
have
volatile with
$400 in their savings for an
24x
emergency,
leverage.
to have prices go
I'm
up
up 15%
by this amount,
just from
it's
buying that low
devastating.
tick.
To have a conversation about
Just
rents
looking for a
around
bounce
the country,
because naturally
looking at the
that's an area
inflationary
of
effect
liquidity
and
I
the
do expect
absolute
at the very
devastation
least
of a
a
snarling
bounce,
supply chain
and I've gotten that. So now I can
we haven't seen in my lifetime, run by
jump
my
out.
friends in the progressives.
Jump in, jump
Unbelievable.
out. It don't make a whole
But to get
lot
to
of
you,
money, but
Chairman Powell, one of the comments that you've made that I think is really important in one of the speeches you gave in January, and I apologize for my rant. I just wanted to make sure my rant was consistent with my friend here. It is essential, you said,
like to
that we
rant.
stick to our statutory goals
Rants
and
are
authorities,
good, buddy.
and that we resist the temptation to
shows
broaden our scope to address
energy.
other important
It
social
shows
issues of the
emotion.
day. Taking on new goals,
We like to
however
capture
worthy,
that.
without a clear
Lie.
statutory mandate would undermine the case of our independence. You further noted that,
I
and
made a
quote,
lot of money
"Without
on the short
explicit
guys,
congressional
so I can
legislation,
take the opposite
it would
side
be
of the trade.
inappropriate
Please
for us to
understand
use
that.
our
That
monetary
short
policy
ended
or
up
supervisory
being
tools
very nice.
to promote a greener economy or to achieve other climate-based goals. We are not and will not be a climate
But
policymaker."
I have a current long position
still
at
stand by those comments?
21960 spot 50.
I do.
Thank you. Finally, I know we're not in the question. I know, I get it. Finally,
You now have 4 minutes and 12 seconds.
yes, I knew the
4
chairman would
minutes
dock
and
that for my
12
time,
seconds left of
and
the
I
rant.
appreciate you doing so
Come on.
with a great humor. Great humor. Finally, several of my Republican colleagues and I sent a letter to you discussing Vice Chair of Supervision Michael Barr's plan to conduct a holistic review of capital standards. I look
This
forward
is
to
going to
discussing
be
those
2
capital
days
standards,
also,
during my
guys.
Q&A, and I will thank you
He's
for
testifying
our
today.
recent conversation
He's also
that we had
testifying
that,
tomorrow.
helped illuminate some of the necessary challenges that we face as a nation and your answers to it.
So be very careful, be very cautious. Small positions, small leverage.
Today we'll hear from Chair of the Federal Reserve, Jerome
If
Powell,
you're
on
trading
monetary
it.
policy in the state of our economy. And I don't expect Chair Powell to weigh in on the mini debate we just had, but I think we all know that the debt increase was much larger under President Trump and a Republican Senate than it has been since. Chair Powell, thank you for your service and your testimony today.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do.
There's a lag.
Our policy actions are guided by our dual mandate to promote maximum employment and stable prices.
Could be up to 2
Without
years
price
before
stability,
we
the economy
actually
does not
see
work for
anything
anyone. In particular, without price
start
stability,
happening.
we will not achieve a sustained period of labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's longer-run objective of 2%. The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen.
There's your
While
spike off the
housing services
lows. If you
inflation
took
remains
the
too
long
high,
down there,
the
make sure
flattening
you're
out in
taking
rents evident
profits
in recently
now.
signed leases points to a
That's a
deceleration in
decent
this
move
component
to
of
the
inflation
upside.
over the year ahead.
Take profits, maybe
That
stop
said,
to break even.
There's little sign of disinflation
And then
thus
if
far
this
in the
ends up
category of
being
core
the low of
services,
the week, you
excluding
will
housing,
have caught
a
it.
category
And
that
then
accounts for
you
more
can
than
ride
half
that
of
out
core
with unrealized
consumer
P&L.
expenditures. To restore price stability, we'll need to see lower
don't
inflation in this sector.
Know that
And there
that's
will very
going to be
likely
the low
some
of
softening
week.
in the labor market conditions.
But for those of you keen enough
Although
to
nominal wage
catch
gains
it,
have slowed somewhat in recent months, they remain
job.
above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy has slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remained very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historical lows.
oh yeah,
Turning to monetary policy.
you're all the way back up to
With
the
inflation
open
well
of the
above
day.
our longer run goal
So
of 2%,
sellers will
and
step
with labor
up
market
here.
remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We
They will
continue
be
to
taking
anticipate that
profits
ongoing
on that
increases in the
spike.
target range for the federal funds rate will
Make
be
sure
appropriate
you have
in
done
order
the
to
same.
attain a stance of
please.
monetary
Move
policy
your stops to
that is
break
sufficiently
even.
restrictive to return inflation to 2% over
Take
time.
profits. Do not be
In
greedy.
addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
Right,
If the
but the
totality
market's
of the
already
data were to
priced that
indicate
in.
that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time.
All of
Our
this year,
overarching focus
probably.
is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chair. There are 23 of us on this committee. Almost everyone will be here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you.
Not gonna
Job
watch
growth
it
is
all the way
strong
to
as
11:30.
unemployment remains historically
As
low. You might not
that
know
was a
that from the
fantastic
opening
trade.
statements. Many drivers of inflation,
We're
corporate
so
greed,
now
rising
we're
inequality,
situated
supply chain
beautifully
disruptions,
where we
Russia's
made money on the spike,
bestiality, if you will, in
and
Ukraine
if that ends
won't
up
get better
being the
because
low,
of interest
we
rate
will
increases.
have
Every
a
indication
bid
is that this
setting there to
post-pandemic
capitalize
economy is
on any
different. Should
further
we be worried,
upside
Mr. Chair,
for the rest
that the
of
Fed
the
is
week.
treating this economic period as it has in the past
Price
instead
goes
of
back down
reacting
and
differently?
stops out the remainder of that position, then the only thing that you will have lost will be unrealized P&L, and that is a good thing, as your money is now safe and you made money, and that's it. That's all one can expect or hope to achieve, not expect, hope to achieve when trading this volatility.
Thank you, Mr. Chairman. So we've been aware since the very beginning and have discussed this publicly on many occasions that there are some differences this time. We, in particular, have not seen the kind of supply side collapse that we saw at the very beginning of the inflation outbreak. Also, the outbreak of a war which had significant effects on commodity prices a year ago. So all that is different. There are also, though, some similarities. There is a mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every opening, for every unemployed person. So we're well aware that this particular situation involves a mix of cycles of forces, not all of which our tools can affect, but there is a job here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation in our conversations in the past to show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next question. Last year, three banking
what do
regulators
you
issued
suggest
proposed
there,
updates on the Community
buddy?
Reinvestment Act to account for changes in our banking system. My question is, does the Fed remain committed to work with FDIC and OCC to finalize a CRA rule, and when will that rule likely be finalized?
Yes, we do remain committed, and I believe we are in broad agreement with the other two agencies on the revisions to the rule. So now we're in the process of writing all that down, and that'll take some time. And then after that, of course, it will come to the Board of Governors for a vote, and that'll involve briefings and discussions. And I can't give you an exact date, but
But as quickly as possible.
Yes, but it will be some months.
Okay, thank you.
It
Banks
would be
weathered the shock of
interesting. Run
COVID-19
DMC
shutdowns mostly
555. You're
because of the
correct.
fiscal
I like
response
it.
provided
It would
by
be
Congress.
very
We now see a
interesting.
spike in loan delinquencies, an increase in overall
But
risk.
you
Banks are
essentially
again
just
plowing
bounced up to
billions,
the
billions,
open,
as
and
many other
like I
corporate leaders
said,
always defended
that's
by.
typically where you're going to see the sell side show back up, right? Originally, that's where my original short entry was, at the open. So naturally, there's still going to be some sell orders sitting there. It's just, that's just the way it is. There's your opening price. So you didn't quite get back up to the open. You can also see that the point of control, which the point of control just means the most volume so far on the day, has traded there. It typically doesn't really give us a directional bias. It just simply shows us if price remains under it, then we can say, yeah, there's a pretty good chance that price is going to remain weaker on the day. If price can get above it and start to trend above it, then whoever is short in this daily range will start to get stopped out. And you have yesterday's high right there, which is a beautiful, beautiful place to look for liquidations moving further if the market decides to do such, right?
On that side of the aisle into stock buybacks, which makes me concerned that if there's a downturn in the economy, banks could end up with too little capital. That's why I'm worried about any potential rollbacks of safeguards or regulations. Can you assure me that the Fed will keep capital requirements strong and exercise more long-term forward thinking than corporate CEOs that seem to be focused on the short term?
I can assure you as to the first part, that we'll keep capital requirements strong.
I didn't expect you to comment on give me an opinion about your looking more forward than companies that look at the short-term benefits of stock buybacks. Mr. Chair, when you last testified, I asked you about the risk posed by crypto assets, stablecoin, the Fed, and other regulated possibilities. How's the Fed evaluating the risks of crypto-related activities by your supervised institutions?
We're not here about crypto. We're here about the inflation that you guys started.
And I'll say that
keep crypto out of your mouth.
Innovation is very important over time to the economy. We don't want to stifle
innovation. You let us play with our internet
magic
internet
stifle
money.
Innovation in a way that just favors incumbents.
Leave that to us.
But like everyone else, we're watching what's been happening in the crypto space. And, what we see is, quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk.
Easy.
Lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care in the ways that they engage with the with the whole crypto space. And
manage your risk.
Notice. And we've issued, along with the FDIC and the OCC, a number of issuances of notices to that effect.
Thank you, and I will close with this. I've long pushed for the Fed to prioritize workers and for the leaders of the Fed to reflect the diversity of our country. We've made progress, but our work is not done. We have a new opening. Understand It's not your job to appoint the new Fed member. We have a number of upcoming vacancies at the reserve banks. I support Senator Reid from Rhode Island, Senator Menendez from New Jersey, and other colleagues who are pushing for more diverse voices at the Fed. Senator Scott.
Thank you, Chairman. Obviously, the Chairman and I both have strong passions about the challenges that we face as a country. The one thing that I do believe that we agree on is the importance of having a strong capital markets as it relates to making sure that Americans have the ability to continue to grow their businesses and to solve their challenges. And frankly, I hope that we get there. Building on the same comment that the Chairman had around capital standards is where I'm going to go with my thoughts today. When I think back on these last few years, it's hard not to recognize the extraordinary efforts our financial institutions of all sizes, frankly, undertook to administer a program like the PPP, all while weathering a shutdown of our global economy. I welcome your thoughts, but from my viewpoint, our banking system was resilient. Our financial institutions stepped up and delivered aid to support families and businesses every single day. That's why Vice Chair Barr's broad comments around holistic review of our capital trouble me so much. We should be laser focused on our economy and addressing the needs of everyday Americans trying to forge a new future and helping them open the door to opportunity. As you and I both know, capital
what we're trying to do here
must be
at Trade Talk.
continually scrutinized, but increased capital does not necessarily provide an increased benefit, and requiring banks to hold capital that is not risk-based and appropriately tailored to a bank's size, scope, and activities can cause more harm than good. At a time of record inflation, where everyday needs are more expensive, we should not be pursuing actions that are harmful. Rather, we should be supporting the engine of our economy, small businesses. While I remain greatly concerned by the Vice Chair's comments, I am hopeful that you will ensure this review is appropriate, keeping the impacts on our banking system front and center. We must promote and further the growth of our economy and thereby our people. Anything less should be unacceptable. To that end, will you commit that any ongoing capital review by the Federal Reserve will follow the law and that any follow-on regulatory proposals will be risk-based and tailored to an institution's activity, size, and complexity, and not a one-size-fits-all?
Yes.
Of course, the answer to that
We're very
question is
strongly
going to
committed
be
tailoring.
yes, dude.
And that'll be, I can say that anything we do will reflect tailoring, which is a long-held principle for us and also now a requirement in the law.
Yes, sir. Thank you very much. 2 weeks ago, I sent a letter with Chairman McHenry to Chair Gensler regarding the SEC's climate disclosure rule, urging him to rescind his proposal and reminding him that the SEC is a market regulator, not a climate forecaster. Much like Congress designed the SEC to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation, and not to advance progressive climate change policies, Congress designed the Federal Reserve to promote price stability and maximum employment,
Maximum
not to play politics.
employment.
To that end, I find worrying the Fed's
Which we
announcement
have
of
currently.
recent actions to consider climate-related
You know what I'm
scenarios,
saying?
coupled
Like,
with remarks by the Vice Chair of Supervision,
It's still
as attempts
almost
to
2
incorporate
to 1.
broader ESG policies
If you
into the
need a
financial
job, it's out
services
there.
system. Banks have and continue to account for
Just go
weather-related
get
risks in their risk management. But efforts that attempt to predict climate change far into the future fall outside the scope of their authority. Importantly,
Absolutely, it does.
the level of speculation required in these models should highlight their arbitrary and capricious nature. At a
Bitcoin's
time when our
pushing up
economy is
above
suffering
the
from
daily
historically high
open.
inflation, I expect our central bank to focus
Not
its
far
time
from
and
the
resources
day high.
on bringing inflation down, not on policy outside
that
of its
long is
mandate.
looking better and better.
I noted in my opening statement a recent speech that you've given about the state of the Fed and how you should resist the temptation to broaden its scope and to address
Get
social
off the
issues.
1 minute. It's
Do you agree that
killing
the Federal
me.
Reserve does not have the authority or statutory direction to use its monetary policy or supervisory tools to wade into the ESG or other climate policies?
I do. As you know, there's a tightly focused role that we do have that I believe that we have, but I would agree with your statement.
Mr. Chairman, I have 20 seconds left, but I'm going to defer because of my earlier question to my opening statement.
Thank you, Senator Scott. Senator Menendez is close, but not here yet. So Senator Rounds. Oh, okay. So, but nice try.
Yes, sir. Just want to make sure whatever you say.
Thank you, Mr. Chairman. Mr. Chairman, first of all, welcome. It's always good to have you in front of our committee. And as you know, both core and headline inflation have remained persistently elevated. And over the past 12 months, real average hourly earnings fell by
CBDC is terrible.
1.8%.
Absolutely
About
disgusting.
4% since President Biden took
Yes.
office.
I think
To make ends meet as prices increase,
I
more
think they
Americans
should
are
allow the
leaning
free
on
market.
credit cards.
If they are going to
At
go
the end
that
of
route, they should allow the
2022,
free
credit
market to
card debt hit
dictate
a
how that
record of
ends up. They should not
$930.6
be.
billion, an 18.5% spike
If it,
from
it
a
should
year
be
earlier.
decentralized. No
And
one
average
should have
credit
that
card
much
balance
power.
rose to $5,805.
I
Over the
agree.
past year, the Fed has acted aggressively to tame inflation, and yet we are still seeing
Which they
price
already
increases.
kind of do have
we've
that kind
discussed
of
this
power.
several
They can
times, but
freeze all your
I
bank accounts, all
recognize
your
that it's an
assets.
ongoing discussion, but I believe that this further proves
So I mean, technically they
that
already
we have
can.
long been feeling the effects
But
of a policy
With
induced
that, it would just
inflation
be easier.
resulting from
An
decisions by the
algorithm
Biden
or the flip of a
administration,
button
primarily cutting off
would take care of
the
it.
resources necessary to improve and increase domestic energy production. I continue to be concerned that if you attempt to use the tools that are available at this time for the Fed, then I believe that we're going to have a challenge of not being able to address specifically the challenges brought out when you have a policy is promoting higher prices with regard to energy, as opposed to what you're trying to do, which is to bring down the total overall cost. And I just wanted to ask, I guess, and you're going to think this is something that we've heard before, but do you believe that you currently have the monetary policy tools to actually reduce inflation? And I just put it in this perspective. In January of 2021, the CPI was 1.4%.
Obviously,
Biden
they have the
administration
tools. It's
began.
working.
In January of
Inflation is trending
2022,
lower.
and this is before the Russian invasion of Ukraine, CPI was at 7.5%, 7.5%. Today, March of 2022, CPI is 8.5%. Wouldn't it be fair to
Wait,
assess that
what?
a lot of the policy or the inflation that we've seen here may very well be due to policy decisions by this administration?
Senator, not for us to point fingers. Our job is to use our tools. You asked whether we have the tools to get this job done, and we do. Over
Yes.
time, there are some things that we can't affect, but over time, we can achieve 2% inflation, and we will.
In other words, you've got a limited number of tools available to you, and the limited number of tools that you have are designed to impact simply the reduction in prices and so forth, and yet if there are competing interests out there that are pushing prices higher, you don't have the wherewithal to decide one tool versus another based on whether it's policy induced or whether it is a matter of a shortage in supplies from outside or whether it's war related.
That's right. Our tools essentially work on demand, moderating demand, and so that's what we can do.
So if there were policies in place that actually help to reduce inflation, in other words, and by that, I'm just going to look at energy alone just as a good example. If policies were in place that were actually allowing energy prices to come down in the United States, then you would have less of a need to use the very blunt tools that you do have right now with regard to increasing rate increases. Is that a fair statement, sir?
In a sense, it is, but I would just say on energy,
I'm not trying to get you to a policy discussion with what the president's
Sounds
doing
like you are.
on his energy policy. I just want to make it clear that you have to respond to what's in front of you, and it doesn't matter where the inflation is coming from or what's driving it up. You're simply trying to bring it back down to that 2% number with the only tools that you've really got.
Yes, but
Yes.
I will say on energy, energy has tended over time to fluctuate up and down, and it's not mainly affected by our tools. So the things we look at are really things that are tightly linked to demand in the U.S. economy. Those we can affect.
And I think just the fact that you've been increasing you've been increasing interest rates, and yet inflation continues to ride up, would suggest, just as you've just indicated, that when you have high energy prices, it's tough to
Hang
impact
on,
that part of it
I just
with the monetary policy that you've got available to you.
So we're really,
Don't
we focus
understand
on
what this
everything,
guy's
but we
talking
also
about.
focus on core in particular, which doesn't include energy prices. And what's happened is core
It
inflation
is
has come
not
down, but
going
nowhere
up. It
near as
is
fast as
literally
we might have
going
hoped,
down.
and it has a long way to go.
Thank you. One last question. Last June, Vice Chairman of Supervision Michael
Core.
Barr testified before this committee that he would defend the use of the aggregation method as an alternative approach to the insurance capital standards, the ICS, proposed by the IAIS. As the final compatibility criteria set to come out later this year, can you confirm that you share Vice Chair Barr's views on this AM?
I will confirm that, but I'll have to get back to you on the status of that.
Okay, thank you. Thank you, Mr. Chairman.
Thanks, Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I want to take this moment to remind my colleagues that there are more than 62 million Latinos that call the
Bitcoin,
United
that's
States home.
not normal.
We are the largest minority group in the country. We account for nearly 20% of the United States population. We contribute almost $3 trillion in GDP. Yet Latinos have no representation in the Federal Reserve's leadership. In the 109-year history of the Federal
Oil
Reserve,
bouncing off
there
of the
has never
2023
never
open. I wonder,
been a
is
single member
that
of the Board of Governors or regional bank president who has the lived
relative?
experience of being Latino in the United States. And in practice, that means that the voices of nearly
Coincidence?
one-fifth
No,
of our
it's
country's
not.
people
It's not
are
ever a
repeatedly drowned out
coincidence.
when the Fed is making critical decisions on economic policy. Decisions that affect whether a Latino
We're
family
back
can
above
afford their
daily
first
support
home,
on Bitcoin.
find a job that pays a living wage, send their children
No.
to college, save for a comfortable
Just
retirement, or
under
get a
it.
loan to expand their business. Right now, the Biden administration has a clear opportunity to
We
make
don't want to
history
hear
with
about
its
Biden's
next nomination to the Board
administration,
of Governors.
please.
It has identified a number of highly qualified Latino candidates who have dedicated their careers to the fields of economics, who are committed to the Fed's dual mandate, who will preserve the independence of the central bank.
You liquidated
The
last
administration
week's
has
high, but
rightly
that had
nominated
already
and
taken
advocated for a
place.
number of diverse candidates with similar
So-
qualifications, both at the Fed and elsewhere.
For the S&P
Despite having
500, I would
5
watch
opportunities
39,
over the past
$4,000.
2 years to
Big
nominate
fig.
a qualified Latino economist
$4,000.
to serve at the Federal Reserve, this administration has repeatedly chosen not to. Representation, or lack thereof, does not happen by accident.
Galgan,
It
cremated.
is a choice, and I hope the administration makes the right choice with this nomination. Mr. Chairman, would you say that
But
it
still,
is
ultimately looks decent on the week
a
for a
truism
pullback.
that the
So
United States dollar
not
is the reserve
concerning.
of choice in the world?
Yes, I would.
Not
And that
yet.
brings us enormous benefits, does it not?
Yes, it does.
Now,
There
12 years
will
ago, a
be
Republican House
potential
brought us to the
support.
brink of defaulting on the debt for the first time in history of this country,
Why is
jeopardizing our
oil
credit and the
literally
world
every
economy.
freaking
I'm getting a sense of deja vu because, once again, Republicans are recklessly
dollar
demanding draconian
liquidating that?
spending cuts
So
to
if the
programs
dollar's
that
gonna roll
hardworking
over,
U.S.
be a
families rely
great
on
spot
in
for that to
exchange for
happen.
allowing the Treasury Department to pay for spending that Congress, including most
it's
of them,
not
have
a
already
major high.
voted to authorize. If you want to talk about
Last
spending cuts, it
week's
seems to me that the
open.
budget is the time to do that, but not to put the full faith and credit of the United States at risk. Chairman Powell, can you talk about the
Last
catastrophic
week's
damage
open.
a debt default would inflict on the economy?
So I guess I will start, if I can, by saying that
There you
these
go.
are really matters
Technical
between
levels
the executive
being
branch
played out
and
right in
Congress.
front of
We
your
do not seek to
eyes.
play a role in these policy issues. But at the end of the day, there's only one
Objective
solution
levels.
to this problem, and that is Congress. Whatever else may happen will happen, but Congress really needs to raise the debt ceiling. That's the only way out, in a timely way that allows us to pay all of our bills when and as due. And if we fail to do so, I think that the consequences are hard to estimate, but they could be extraordinarily adverse, and could do longstanding harm.
Well, I think that's a mild statement of what would happen. I understand. I didn't ask you to engage in the congressional executive branch roles. I asked you about the abstract question of what happens if you have a debt default. Isn't even this constant fight putting into question the possibility that the United States will not honor its full faith and credit have consequences within the economy?
In principle, it could. I think markets tend and observers tend to watch this and tend to think that it will work out, and it has in the past worked out. So it needs to work out this time too.
Now, seeing your testimony before the committee, is it fair to say that you'll do whatever is necessary to tame inflation?
Today's close on Bitcoin, we
We
definitely
serve a
would
dual
love
mandate,
to
and
see
we will
a
do what we can,
closure
everything
today
we can to
above
restore price stability while also
22,350,
serving maximum employment.
And primarily that
as that
means,
could be an indicator telling us that this
additional rate
was
increases,
nothing
would it
more
not?
but
What
a
other tool do you have?
retest
That's what we
of
have. The balance sheet, the shrinkage of the balance
resistance.
sheet will continue too, but it's principally rate hikes.
So the question is, when does that part of doing anything necessary to tame
Obviously, a
employment,
close
to
under
tame
will mean
inflation,
that we have
come into
lost
conflict
support.
with your other mandate
And
of
then
maximum
this
employment?
will potentially be
Not now,
a bearish
when we have the
target.
lowest unemployment in 54 years, and where we have a labor market that is extremely tight, extremely. So, but that time could come, but it really isn't now, where we're very far from our price stability mandate, and in effect, the economy is past most estimates of maximum employment.
Thank you, Mr. Chairman.
Thanks, Senator Menendez. Senator Kennedy of Louisiana is recognized.
All right, these are mainly, I mean, now they're just talking about policy and stuff. You guys got the technical levels. I got to get in there and cook breakfast. I'm not going to just sit and listen to them talk about whether or not Biden's policies are going to affect inflation or not. The Fed is going to be the ones that fixes inflation. But they have a tough road ahead of them, right? As long as they keep spending trillions and trillions of dollars, inflation is going to potentially keep rising. So just keep that in mind. So we'll see how Bitcoin ends up closing out the day. This is a very volatile move. We haven't seen that kind of volatility in some time since this big nasty dump here. So people are still going to try to be on the sell side based solely on that move. On this move alone, people will be looking to sell into this pop. You got a very strong dollar on the day, and your risk assets are leading the way to the downside. Your Dow is back under the yearly opening range, and it's the midpoint of that downside push. I typically do not like to see that, but Bitcoin has not been trading correlated to risk markets for the last couple weeks, right? Bitcoin's been trading under its own merit, under its own price action, doing its own thing. So I'm going to continue to trade Bitcoin with the chart Bitcoin provides. A close above daily support today will be a good thing, in my opinion. And then tomorrow we could potentially look, to be buyers again at another daily support test or a run to support, depending on where this thing closes today. If the dollar remains bullish and if risk remains bearish, then I would assume that this trade will be stopped out. I would assume that Bitcoin will ultimately, before the day's out, roll over. So keep that in mind, guys, right? As of right now, your point of control has not shifted to the downside, which is what I would have loved to have seen if this was going to see demand. So sellers will sell on the pops. You are testing a technical level now on the US 30. You know what levels to watch. All right. I'll make posts throughout the day as the day goes on. I will continue to watch naturally. If you are looking for short trades on Bitcoin, if you have a bearish bias, you have a resistance, an objective intraday resistance level to watch, or you can watch the daily open. As on Bitget's exchange, you have yet to been able to close a 5-minute candle above that since this press conference started. All right. And you definitely have not closed an hourly above it. So 22,397 would be an area of influence. If you cannot close above that, then price is showing you, even still, even with this nasty wick, that the pressure is still to the downside. So make sure you mitigate all your downside risks. Okay? Thank you guys for being here. We'll do it again tomorrow. We'll start a little bit later. We'll start closer to 9:30, and we'll see. And we'll have more data, right? We'll know more about what happened today and what we can expect for tomorrow. But we will look for trades tomorrow as well. Thank you all for being here. You guys rock. I'll see you tomorrow. For the rest of the day, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.